Over the past decade, smartphones have evolved to track your sleep, count your steps, and turn you into a professional photographer overnight. But your mobile wallet hasn't changed at all. Now Apple is being forced to open their NFC, the wallet wars are about to pop off. And as the only mobile wallet that helps customers save and earn as they spend, Curve Pay is coming to the fight prepared. Do more than just tap to pay. Pay, earn, and save with Curve, the mobile wallet that's long overdue. Download Curve today and earn 1% cashback on your spending in your first 30 days.
Hello and welcome to Fintech Insider Insights. I'm Kate Moody, Customer Strategy Director at LNFS. Today we are diving deep into the UK's very first fully digital challenger bank. Since 2014, Atom Bank has grown to be one of the most profitable neobanks in Britain, and we'll be talking to their co-founder and CEO Mark Mullen about building a bank before even Starling or Monzo did. Atom has gone from strength to strength, revealing in March this year that it has made an operating profit of £27 million. Not too shabby. We'll discuss how to build a trusted brand and Atom's plans for the future. So, welcome back to Fintech Insider, Mark. Always a pleasure to have you with us. How are you doing today?
All good, thank you very much.
Brilliant. Let's dive in. I suppose, so 2014, to me, seemed like quite a long time ago. I had to sort of anchor myself in some significant moments, Conchita Wurst winning Eurovision, Germany beating Brazil 7-1 in the World Cup, things that were significant to me. But I'm guessing from your perspective, you had some slightly different priorities. What was it that prompted you in 2014 to think we need a new bank?
Well, not in 2014, actually in 2013, because the story of Atom really started about at least a year before we ultimately kind of created the company in March of 2014. And what prompted it was a bit of serendipity, an accidental meeting with people at a party, followed by a growing sort of, unease. I was in my mid-40s, wondering, is this it? Having spent forever in HSBC Group. A bit of dissatisfaction with, my own lot and with the banking industry and the profession generally. And then, a mad opportunity. So I'd like to tell you that I woke up on a Sunday morning with a great vision. That's not the case. I think it was a bit of a slower burn. It took about a year to actually get, a plan that had some sense and some structure.
And I guess that makes sense, given that at that moment in time there were no digital banks, right? Like, it wasn't like you were following a path that someone else had laid before you, right? You were really stepping into new territory here.
It seems obvious to me, though, and I think it always felt obvious even at the time, that when you looked, I think back to 2006, 2007, when you start to talk about iPhones and iPads, the sort of inevitability that service businesses would migrate to that technology didn't seem like, and I don't think it was particularly difficult to foresee and forecast and predict. And so the only difference is building businesses that are more focused and don't do other stuff. So don't do internet banking, don't do telephone banking, don't do branch-based banking, and then making the decision to say, this is it. And that seemed to be a little bit more radical and a little bit more risky than saying it'll be mobile.
Okay. And obviously, so you've talked about 2013 is kind of when it first started. 2014 is when maybe it started to become more of a real thing. Obviously, you launched in 2015. Again, maybe talk us through that kind of that first year of what building up to that 2015 kind of license and getting live.
Yeah, listen, it was at one level chaotic and great fun and frenzied, because you're raising money, you're trying to get an application to the Bank of England pulled together, you've got no people, you've got, frankly, too little money, and you've got no time. I was working notice because I resigned from First Direct in April of that year. And so you're trying to juggle a whole bunch of different things and try to stay honest. And at the same time, you've got to try and move a business forward and persuade people to invest in a harebrained scheme with very little more than a very thin deck, a few sort of concepts and promises. That was chaotic, I think, is probably the best way to describe it, but hugely energetic and life affirming. But it's also a distant memory. You would be amazed. Well, I would be amazed at just how fast it becomes like it never happened, or it happened to somebody else. Because you're quite quickly focused on, well, what's the next thing that needs to be done? And so you get a banking license. I'm not even sure that we celebrated it wildly. I think it was like, yeah, great. We got it. I think we got it, almost to the day, 6 months from when the clock ran out. And, because they get 6 months to say you can have it, you don't have it. And I think they took like all 6 months. And then there was a restriction which you had to get lifted within a year. And I think the PRA took like all the year. So by the time you got it, you thought, oh, well, thanks.
Yeah.
Let's just get going, please.
Yeah. And I suppose, Ian, do you look back to those initial pitch packs? Like, how different is the vision maybe that you were articulating then to how you would express kind of the core purpose of Atom now?
Listen, at its absolute heart, there's a lot that is familiar to me when I think back about where we started and why we did what we did and what we do as a bank and also what we don't do as a bank. When we began, it was, originally we thought we'll build a broader proposition. So we'll have more products, we'll have current accounts, and we'll look at credit cards, and we'll build essentially a universal but full service bank. We'll just do it digitally. But that became for us very, very difficult, very expensive and very complex to do. So ultimately we sort of focused back into lending. Now, we had always planned to be a lending business. That was never, it's an unfashionable thing. And it was very unfashionable back in 2014, 15 and 16. Less so now, incidentally. But took a long time for that to be a good decision because back then it was a tougher decision. But we always wanted that. It's just that initially, I guess our appetite was bigger. And time, money and events, dear boy, events sort of focused or forced us to focus on a narrower range of things. In the end, I'm glad it did.
Yeah. And I suppose that is one of the things, when I'm chatting to people outside the UK about the UK fintech scene and you're sort of comparing some of these digital banks, I suppose that is one of the things that sets Atom apart versus many of the other kind of more established players now. But you have this more focused offering that you've not gone down the current account route compared to Monzo, Starling, Revolut, for example, now edging towards having the license and the full product set. How much has that been a strength for you guys over these years? Has it kind of helped you to really focus in on doing a few things well, or does it curtail maybe your roadmap in some ways?
It's a constant conversation, even today, about why we don't do those products. So it's a sort of a head scratching. Well, why don't you broaden and branch into this, that, and the other? And so at some level, I find myself constantly having to re-explain and defend what it is we do, why we do it, what's the business case for it, et cetera, et cetera. Sort of the most fundamental principle in marketing, and I've spent more of my career in marketing than anything else, is to try and create a differential advantage for your brand or your business. That being the same as somebody else is not a good look, not in marketing and not in brand or product terms. So the fact that we are more focused, the fact that we are quite specific and quite unique in the context of challengers and fintechs is really important to us. And I'm very pleased that we are. There's not much point in being a facsimile of somebody else's business model. Unless you're going to say, I'm fundamentally better, then, really that's a pretty dangerous place to go. And I think with the limited amount of resources, and all startup businesses have a limited amount of resources, even the ones that look really, really big, that focusing on a narrower range of products and services or customers absolutely increases the chance that you're going to be successful. And for me, at least, more importantly, you might actually be good at it. That it's better for us to be great, frankly, at something than it is to be mediocre in an industry that's pretty mediocre at a very, very wide range of stuff.
Yeah, I did notice that word mediocre pops up in your annual report. It was one of my favourite quotes from your annual report. Your description of the UK banking industry as mediocre. I think I can find the precise quote if you want it word for word.
No, listen, it's I don't. Chucking sticks or chucking stones at other businesses is never a particularly nice thing to do. But some of the data points are, they're matters of fact and record, and that's about, well, are these efficient businesses? Not really. How long have they been talking about cost efficiency gains and how slow is that to deliver? Are they widely trusted by their customers? No. Are they widely loved by their customers? No. Look at the public data that tells you that. So whether you like it or not, them's the facts. And it doesn't set a very high benchmark. But in order to get somebody to make a different decision, being incrementally better is not good enough. You've got to be substantially better than the average.
Yeah. And you mentioned obviously that you moved from First Direct to Atom.
Yeah.
What was that shift like, leaving a major bank, moving to the world of...
Well, great learning opportunity for me. Firstly, nobody misses you. Honestly, it's like I never worked there. I spent 24 years working in HSBC Group. It was thanks and good night. I resigned, and I was gone from the building on the day I resigned, and I never spoke with anyone in HSBC formally after that at all. I got a letter a few months later warning me not to, disclose information about HSBC to something else. There was no fanfare. There was no like, oh, really brilliantly well done. It was like, okay, that's pretty humbling. I thought that, because you kind of think, well, gee, I thought I was somebody. Turns out, not really, not so much.
Yeah.
But it's good, actually, in retrospect, because nobody's irreplaceable. And you have to hold on to that, right? That you have to create businesses that keep on keeping on, that have resilience, that have succession plans, that can survive change, because it's really important for customers. And it's quite, I think it's quite a good challenge to an individual to understand that, yeah, you're important, but really, you're not really that important.
Yeah. And I'm guessing, correct me if I'm wrong, I'm guessing you didn't start Atom all on your own. I know you had other founders.
No.
We said we had a co-founder in the intro. So again, talk me through that kind of founding team. Who were the kind of key people?
I worked with Anthony Thompson way back in 2013, and Anthony had a track record or with Metro, and then we found a number of other like-minded people. There were 6 of us when we started the journey, and I think by the end of the first year, there was like 20, but it was still a very small team, and to get the license in together. And what you found is, because I'd been the chief executive of First Direct and I'd run HSBC's UK contact centres, and you get out of the habit of actually having to do work, which seems like a really strange thing to say. You don't write reports anymore; somebody else does it, and then you criticise them
constructively, I'm sure.
Constructively, of course, and then they go and you don't. There's just a whole bunch of stuff that you don't do anymore, and then suddenly you find yourself in a situation where actually, if you don't do it, then it's not being done, and so that small group of people have to work very hard. They have to know what they're doing. And that's another interesting challenge, because the people that you're recruiting or working with are not necessarily the most balanced people that you can imagine, because they really have to have more technical knowledge than they necessarily have behavioral sort of, if you like, skill, because that's what you're buying. Because you haven't got the money to have the fully rounded, sort of personalities that businesses really need to function in the long run. You need people with real experience, real skill, real insight, and real technical understanding, not generalists. Mm. And as you grow, then you have the sort of opportunity to bring in a broader skill base to your organization. But I'm never surprised that the people who found businesses are often quite curiously sort of, if you like, eccentric and being kind, or very one-dimensional or very focused, almost to the exclusion of all sorts of other things. And that sometimes doesn't necessarily sort of result in positive headlines, not pointing fingers, mentioning names, or, but it doesn't surprise me at all, because you don't do this because, you're the most rounded human being in the world. That's not my experience of talking to people who are entrepreneurial or entrepreneurial teams.
Yeah. And I guess that's created not maybe challenge is too strong a word, but I assume you've had to migrate away from that over the years as you've grown the team and the culture of the business. What does the kind of the core ethos or culture of the business look like today?
Well, when people join the company, I meet everyone who joins the company, and I make it a point of sitting down with everyone. Not one-to-one necessarily, but in groups. So, and the reason I do it is that to try and communicate at least directly and personally what we're doing and what's important to us. And frankly, you can check it with anyone, but I always talk about the importance of care in Atom. And I talk about the importance of care within the team. That if you don't care for the colleague that you're working with or the people that you're working with, you're not going to fake it for customers. I truly believe this to be the case. That even though it's a digital company, you think, well, it's just technology, and the machine doesn't care. But the policy and the action and the whole attitude of a company and a brand is driven by human beings. Make no mistake about it. If they don't give a damn about each other, they're never going to give a damn about a customer. So the ethic of the company, at least the ethos of the company, starts with our own people. It absolutely is a very employee-focused culture and very employee-centric, because we want it to be customer-focused, not in spite of it. It's not like they're more important, But I guarantee you that if you don't get the right employees with the right attitude and mindset and values, you're never going to make it with in a customer-oriented company. Happily, I think we've got a good balance between the two. So that's what changes. It isn't about you. It really isn't. It becomes very, very quickly, and I'm sure that lots of people you speak to will say the same thing, very quickly it becomes about all the other people associated with the company and really not about you at all.
Yeah. And obviously for our international listeners, you guys are headquartered in the northeast of England, in Durham, beautiful city for anyone's not been. How has that shaped the business that you've become?
Well, it meant I spent rather more of my life on the East Coast main line than I really wanted to.
It is a beautiful train line.
It's a lovely train line and there's great views. Better once you go north to Edinburgh, but never mind. Because listen, the reality of the UK is that the sort of administrative centre and cultural centre, financial centre and regulatory centre is in London. Mm-hmm. And and the money, let's be honest, is mostly in London too. So you do have to accept that there are certain sacrifices and overheads associated with headquartering the company outside London and the sort of southeast that you just have to accept. But the importance of the decision was about investing in the region, headquartering a company in the region, creating high quality jobs in the region, because the region underperforms in the UK across a whole variety of different measures. And one of them is the number of private companies that are headquartered there, and we wanted to sort of make a positive contribution to changing that. The people are great, but I've worked in Leeds in the Midlands, I've worked in Birmingham in the Midlands, I've worked in London, I've lived in Kent, I've now lived in Yorkshire and work up in Durham. People are great. So I don't buy into this exceptionalism of they're better here than they're not. The people are great wherever I've been. I think the important thing is you don't have to be in London or the southeast to build a great company. There are sacrifices that you're going to make in order to make the difference or make the change. But it is quite important to spread the wealth and to balance a country. And I think we're trying to do that.
Yeah. And obviously, the big thing you're doing at the moment is the 4-day week. I'm sure you're probably fed up of talking about it. But again, for our listeners, maybe who haven't come across Atom as much and haven't heard what you're doing, maybe talk us through the thinking behind that and what it is you're looking to achieve with it.
Well, the 4-day week is often it's interesting because it's different and radical in the context of the sort of normal sort of practices of businesses, because very few businesses operate a 4-day week and very few businesses of our size, so we're about 560 people, have that process. I've long said, for us, it was a very much easier and remains a very much easier proposition than flexible working. Flexible working post-COVID is the sort of, the Wild West of chaos because nobody planned it. Yeah, so it kind of was imposed upon businesses and then they've sort of evolved from it. Whereas 4-day week was planned. We're a 7-day week business. We provide service to customers 7 days. So we've got shift patterns that obviously cover the service windows. And the Bank of England will close down on a Friday. So if they want me to come to a meeting on a Friday, I'll be there in a meeting on Friday. So, there's a bit of pragmatism that has to be applied to it. But pretty much, I don't really think it's a big deal, right? I think it's eminently possible for any business, to rethink its working patterns. For some businesses, it's going to be more challenging because they're in-person businesses. You've actually got to be in front of a customer to deliver the service. But for a digital business, dealing in a commoditized proposition, which is money, it's just a commodity, remember. It's dematerialized, it's digital, it doesn't even have physical form anymore. It's entirely possible to do it. And we did it because we wanted a better and differentiated employee value proposition. We wanted people to again, to our earlier comment, are we an employee-centric company? Yes, we are. And this is one of the ways that we express that.
And what have been the impacts that you've seen? How has it impacted the business?
Positively, the business. So there's, I can either tell you that I've not seen a performance metric, an outcome metric of Atom that has deteriorated in consequence of a 4-day week, which is really interesting. Because it's either telling you that you're carrying inefficiency, which is a possibility, or it's telling you that actually people will compensate. They'll compensate to make sure that the outcome measures don't deviate. But the business is more profitable. We're still 5-star Trustpilot rated. We've still got 2 5-star apps. We've got a net promoter score, customer promoter score of over 90%. We've got an employee engagement score of plus 81%. I mean, really? Bite me if you don't like it. I made a comment in the media a couple of weeks ago, which is it's not for everyone. But I'm not here to say, I'm championing the 4-day week. I'm not. but it's right for us. And as long as everyone else is not doing it, I'll happily tell you, come on board, because we have a very different perspective about employees. You want to give me that differential advantage and let me keep it, I'll take it any day of the week.
Yeah, makes sense. And again, I suppose our key stakeholder for you guys must be your investors. I guess you've been quite lucky. You've had some consistent investors for a long part of this journey. How have they reacted to this change in the organisational structure in the 4-day week? Was that something easy to convince them of, or did they not even factor into that decision?
No, they're very, very interested in the company and in the effectiveness and the efficiency of the company. So of course the investor wants what they want, and they want a business that's on a trajectory to ultimately create value for them. But our investors are progressive enough to know that value for them requires value for a broader stakeholder group. And the business is a bunch of contracts with people. If you think about a company and you really sort of step away from it, what is it? It's a set of contracts. We don't own much. We produce code. Well, put it in a box and show it to me, please. There's IP in it. We have leases for buildings and stuff. And we have contracts with people. They're legal contracts. We don't own the employees. Like, you really want to get to what a business is, then it's a set of legal contracts between customers and employees and blah, blah, blah. That's all it is. So when you're an investor, you want to make sure that ultimately they're performing, those contracts are coming together to generate a return. And if we did it with a 3-day week, as long as we're generating the returns and the efficiency metrics and the growth potentiality, then I don't really think that they're not dogmatic about this is right, that's wrong. They never have been, incidentally. You made one comment there, which was, we were lucky. Oh, yeah, you're absolutely right, we were lucky. We work quite hard on being lucky with investors and staying close to investors and engage with investors. And so that stability isn't entirely lucky. They've been brilliant and hugely patient. Goodness knows. I wouldn't have been as patient with me as they have been. But we do genuinely work hard to try and stay close to them.
Yeah. No, I can see that for sure. Well, I mean, an exclusive for Atom employees and 3-day week. 3-day week can become. Yeah, that's what I'm taking away from this.
Yeah, I know, but no.
No. Okay, well, on that note, we'll have a quick pause. Coming up, I continue the conversation with Mark as we discuss Atom Bank's future and their plans for expansion. It's all coming up after this super quick break, so don't go anywhere.
Over the past decade, smartphones have evolved to track your sleep, count your steps, and turn you into a professional photographer overnight. But your mobile wallet hasn't changed at all. Now Apple is being forced to open their NFC, the wallet wars are about to pop off. And as the only mobile wallet that helps customers save and earn as they spend, Curve Pay is coming to the fight prepared. Do more than just tap to pay. Pay, earn, and save with Curve, the mobile wallet that's long overdue. Download Curve today and earn 1% cashback on your spending in your first 30 days.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Welcome back to Fintech Insider Insights, where I'm in conversation with the co-founder and CEO of Atom Bank, Mark Mullen. So I suppose we spent the first half of our chat talking about the journey from the start of Atom to where we are today. What's next?
That's a broad question, isn't it?
I thought, why not?
Well, what's next is we need to get bigger. We need to get more profitable. We need to get more mature, more stable. We need to, do that. Honestly, the what's next? Are we going to try to conquer the world? No. Are we going to launch 10 new products? Are we going to go into current accounts or credit cards? No, we're not. We're going to keep on keeping on, focusing on what we're good at. We've still got a huge amount of stuff that we need to get better at, to be really, really honest about you. And so it's just hard-won yards to get to where we are, an awfully long way to go. But there's a huge potential to grow the company, and that we're very excited about that.
You've always spoken very passionately and very articulately about maybe some of the flaws in the UK banking market, some of the ways in which some of the biggest players are underserving customers. I come at this from the biased perspective of a customer researcher. I speak to customers all the time. What are the customer problems that exist in the market that you would love Atom to be solving in 5 years from now that you're not currently solving?
I'll never make an apology for describing the banking and financial services sector as a commodity sector. It's a very important commodity. It causes one of the great stresses of life. I'm not saying that money is a commodity, highly valuable commodity. And if you think about it that way, as a consumer, you should be trying to get the highest price or the lowest price, dependent upon whether you're borrowing or saving. Seriously. So when you then look at the actuality of how customers behave and you ask yourself, why is it that about £750 billion of UK savings is sitting in accounts earning at least 200 basis points less than we're paying on our instant access saver? Why is that? How is it that you can have a commoditized industry where everyone's protected by the same £85,000 FSCS guarantee, but some people are earning so much less than others? What's wrong with that model? That is why there's immense amounts of growth opportunity for Atom. That is why the work is not done, because we need to be able to break that cycle and encourage customers to frankly, be disloyal. I've said it many times, I'll keep saying it, which is loyalty to your bank is bad for your financial health. Shop around. Don't do it once, do it all the time. And if we have a mission at all, it's to shift the conversation into what you're actually buying, not what you think you're buying. You're buying money. Pay as little for it as you can, please.
These are deeply ingrained flaws in our system, right? Like, how are you going to disrupt that system?
I think there's a number of ways that you can disrupt that system. Firstly, we've got to get our regulators to, and there's announcements today as we record this about new capital requirements that came out, Basel 3.1. That's taken an awfully long time to produce very little clarity. We still have a regulator, I think, who is playing catch up in an industry. I describe them as analog, trying to serve a digital sort of profession. And so I think regulation has a role to play in making it possible for competition to really compete head on with the bigger banks. And that comes in the form of the capital requirements regime. And the regulator is, I think, underinvested and under-resourced to be able to make that possible. And it's important and it's arcane and it's a bit dull and it's in the guts of the industry. But that doesn't mean it's not making a difference to UK consumers, because it is. And so that's one aspect of it. The other aspect of it is, you know what, there's nowhere to hide. You've got to build a better business. So you've got to build a business that's actually better at serving customers, that is faster, that is easier, and that offers them a better price. And you've got to keep on doing it. And you've got to be patient and relentless. And that's no magic in what I've said. That's what is required if you follow the philosophy that we follow, which is actually the value of the money, the price of the money is what matters most to you. And if you've got 10 or 20 grand savings or 5 grand savings, you should be trying to extract all the juice from it, And your banks are not helping you do that. I promise you, the vast majority of UK banks are happy to pay you as little as they can get away with. My job is to figure out a way of paying my savers as much as I can.
Yeah, I suppose when I speak to customers, when I interview customers, one of the main gaps I see absolutely is the money that you hold earning the best possible return it can earn. But also, do you as an individual have an understanding about how much of that money you need to actually be able to access versus how much of that money you could afford to put down for 2 years and get a higher rate? Like, I think the average consumer struggles to sort of allocate their money efficiently as well. And that's something that, again, really the current system skews towards affluent people because they have access to advisors, they have access to people that help them navigate those choices. Alongside the things you're doing to improve your rates, your products, is there kind of that service layer, do you think, where actually you can help people to take the money they have and allocate it and manage it in smarter, more dynamic ways?
I think you've got to be careful because the regulator doesn't want us getting into advice. And once you get into advice, then it opens up a sort of hornet's nest of accountability and liability. Our antidote to advice is just produce really simple products and services. I mean, so simple, frankly, that you're trying to get to them to the point where any average consumer in the UK can navigate them and understand what they're doing and understand that there isn't a hook, line and sinker involved in it. Do people need help to understand how best to save and how to plan for it? Yeah, of course. But there are huge holes in the UK banking market in regard to the provision of financial planning. And that is not something that banks can address easily. Simply because the regulation is I actually think it's over-regulated and it's stopping actually average consumers, average punters, frankly, who don't have a huge amount of money, taking advantage of decent financial planning or any financial planning for the most part. I think it's, is it possible to create a product that doesn't punish a customer for changing their mind? You think about the way this industry works, you still have an industry where revolvers pay for transactors in the credit card model. So your point was that rich people do better. Yeah, they do, and it's not fair. You still have a free if in credit model. Like, how is that working? Well, that's working only because somebody else is paying for it. And so we're trying to build a business model that doesn't have any of those cross subsidies. That if you have a product with us, then that product has to work on its own for you. You don't have to buy another one to make it work for us. There has to be an equitable exchange and the product has to make sense on its own. But it also has to be very, very simple and very, very easy to administer.
One key part of your business, which I think most people would say isn't simple, is the world of mortgages.
Yeah.
Obviously, probably wouldn't be the first product you'd pluck out on a list of easy products to nail, right? But you guys have really focused on mortgages. You've announced recently that the digital mortgages brand is coming back into the Atom brand. Talk me through the thinking there about what's the future of mortgages at Atom.
Yeah, it's the digital mortgages brand was a means to an end when we started the business, and as we look at it, it seems to have less of a role to play. So if you think about it simply from a marketer's perspective, splitting money between two brands is less efficient than focusing it on one. We're not a very big brand, so clearly we want to make sure that we optimize our spend and our investment behind Atom. So we're getting rid of the digital mortgages name. It no longer has a use to the business, and it doesn't get any more complicated than that. When it comes to mortgages, I agree, it is complicated. But again, it's one of the less disrupted parts, digitally disrupted parts of UK banking. So we are demonstrably more efficient and faster than any other bank in the UK when it comes to mortgage origination and servicing. And it's not an idle claim, it's a fact. Right? So about a quarter of all of our mortgages are same day, apt to offer. And on average, we're always below 5 days, and on average, we're about 3 days apt to FMA. In the mortgage industry, that's more like somewhere between 14 and 20. So it is possible to make the whole process much more efficient and much faster. And we still think that there's a huge amount of opportunity for us to get better and better and better and to truly digitalize the whole thing. What upstream, you've also got to be careful that people understand what product they've bought. Yeah. So again, I come back to what's a good financial product? It's a product that the customer actually understands. So I'm personally believe that the mortgages is an unconquered territory. We're a small bank. We've loaned over 5 billion quid to UK mortgage customers, but it's a drop in the ocean. We could be huge. We want to be.
And where do brokers fit into this? Again, we chat to loads of incumbent organisations, fintechs. People can't seem to quite work out whether brokers are a thing of the past that are dying or if they're a part of the system that we just need to build better technology around. What's your view on brokers?
Isn't that an interesting thing? So why don't you just look at the data? Are they dying? Are they thinking of the past? Well, I don't know. They're about 80 to 85% of all of the business that's written today. So, bite me if you don't like them. It's just nonsense because the facts of the matter are that the broker model is the dominant source model for advised sale, full stop. Then you have to look at it from what's actually good for the customer. Is it better for the customer to look across the whole market to find the right mortgage for them? Or is it better for them to just look in your shop? And too often I find companies who automatically say what's good for me is good for the customer. But it's an unquestioning assumption that generally isn't true. And therefore, I like the broker model because the customer who gets recommended an Atom mortgage hasn't been bribed to do it to get there. It's actually, been recommended on the basis of an evaluation that is a regulated sales journey. Be really clear. Can it be made more efficient? Yeah, I guess it can. Can you see a future where either a robo-advisor or an AI composite replaces a mortgage broker? Absolutely. Absolutely. I think that ultimately will happen. But I don't think that it'll happen quite as quickly as many commentators have suggested. And I'll tell you why I say that. We started in 2014. So 10 years later, look at some of the dynamics in the business. Yeah, 10 years ago, about 80% of all the money that banks made was made in interest earnings. Today, about 80% of all the money that banks made is made in interest earnings. 10 years ago, the broker model was going to be dead. 10 years later, it's still fine. So yes, change happens in banking. I don't want to be glib about it, but not necessarily overnight. It tends to evolve.
Yeah. But your annual report says that you are looking to move into that more direct model.
Absolutely. But only when it's right for a customer. And mostly in that case, that is about at renewal, where they're not changing the terms of the mortgage. But if they're changing the terms of the mortgage, the rules are very clear. They have to get advice. So we have to play by the rules, and that is what we're doing. If they don't need advice, we want that decision to be digitally enabled fully and to be literally about 2 minutes work in an app. And that is already the customer journey that we deliver. So if you're going to do it direct or do it, outside the broker model, make it slick. But other than that, understand what the broker model is delivering. It's delivering advice. And is that advice valuable to the customer? I think it is.
Yeah. I suppose I've been doing quite a lot of work recently in the retirement space, looking at kind of some of the issues around retirement. And one of the main future problems that I think we face probably in the UK, and I'm sure many other markets around the world, is people going into retirement still paying off mortgages or not having a property that they own and having to pay rent. I would love a company like Atom to be really helping customers to get to those bigger life outcomes and have sort of financial success. Do you kind of think about those problems, or it sounds like you're taking things maybe slightly more step at a time? I don't know. I
think it's fair to say we're taking things step at a time. I don't think if you're a lending business, and we're a lending business, you've got to manage the risks of loans. We're very good at it. We've got such a high quality loan book that we know how to make credit decisions and how to lend money to people who will pay it back. In the whole history of the business, we've never had a fraud loss. You just ask any other company out there about that subject. So yeah, we're cautious and we're conservative, but we actually think that's important to our customers and to ourselves. Where do I think we go? I think it's a hugely interesting thing that you've just talked about, which is I think savings and mortgages are just about wealth and about investments and about planning for the future. People who are saving and buying houses are doing it, yeah, of course, for a place to live, but a house is an asset. And to your point, sometimes that asset actually is converted into their retirement plan. So to me, that comes together in a very interesting way. And we're already beginning to think about the future of the company and whether we can begin to build a franchise in wealth. And if we did, what would we do differently? And I think that's the key question. In much the same way that, we're not in the business of trying to copy other people today. I'm not really interested in copying anyone else out there either, because I'm not sure that anyone's particularly resolved what you've just described. How can you make financial services more accessible to more people in a way that actually they understand and that doesn't catch them out? And I'm still working in an industry where people can be caught out, and I don't want to be part of that.
Yeah. Again, probably in the category of questions you're fed up of being asked, but you told City AM earlier this year that you're in no rush to IPO. We're hearing lots of fintech. We always hear chat about the next fintech to IPO. At some point, will Atom IPO? Can you give us any kind of exclusive sneak preview?
I can't really. I've been hostage to this so many times because everyone asks me about, when are you going to list? And it's dangerous, the most dangerous question I get to answer. So priority number one, build a great company. Because there's no point in thinking or worrying about IPOs or exits if you haven't got a great company. And because a great company is how you get a premium valuation, and it's how you get to an IPO in the first place. Secondly, you have to be governed well. So if you want to live in a public market, getting there is one challenge. Living there is almost as big a challenge. And because the market doesn't like shocks and surprises, and there are too many cases where companies have gotten to the top of the mountain and then frankly fallen off the other side. And so why are we not in a rush? We're not in a rush because we need to build the right track record, the right stability, the right governance model, just the right predictability. You can't have the same level of volatility that you can when you're a sort of plucky startup or you're a fast growth company. You've got to be able to weather a much, much more exacting and challenging oversight and regulatory environment. It's also not the only game in town. At the end of the day, I don't own the company, remember. So I can tell you anything, but the owners of the company will have a say in the destiny of the company and whether we're looking for a public listing or whatever else you can do. Right now, my energy genuinely is on just build a great company. And at some point, yes, we will absolutely look to crystallize the value of the business because we should. We owe a lot of people a lot of money for getting us this far.
Yeah. And I suppose we're coming towards the end of our time. It's been almost 10 years since Atom launched. I suppose if we've not offended you so much in this conversation that we could speak again in 10 years' time, where would you hope the business is 10 years from now?
I want it to be a great company. I'd love it to be an iconic brand in the UK. I'd love for people to think that's a brand that is a real symbol of quality. That if you wanted to say, well, what does Atom do? Well, Atom's a bank and it lends money or it's saving. I'm not terribly worried about, what products will it offer? I don't think I have a crystal ball that tells me to be dogmatic about that. But I can be more focused upon what does that symbol promise and does it deliver it? And I don't think there's that many companies in the UK that are genuinely iconic and have a consistently positive set of associations. That's the brand that I want it to be. I'm much, much less concerned about whether it does product A, product B, or product C, because the world changes and good companies have to be agile and they have to change in response to it. But I'm much, much clearer about where the quality standard of the company needs to be. And that's the best answer I can give you, right? I think we've come a long way to build a company that's got a bloody good reputation with its stakeholders. I don't think we're finished, but whatever we do, however big we become, I want that quality standard to be the same, if not better, in 10 years' time than it is today. It's highly unlikely that I'll be having this conversation in 10 years, so let's be honest.
Yeah. Well, hopefully we'll all be on a beach somewhere with cocktails by that point. So that wraps up today's discussion. Thank you so much for taking the time to speak to us and share your perspectives. Where can people connect with you, find out more about Atom, find out more about what you're doing?
Well, you can find me on LinkedIn and you can find more about Atom on atom.co.uk.
Brilliant. And you can find me, Kate Moody, on LinkedIn or drop me an email, kate@olympus.com. Thank you for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others to find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider or email podcasts@11fs.com. Thanks very much. Goodbye.
Over the past decade, smartphones have evolved to track your sleep, count your steps, and turn you into a professional photographer overnight. But your mobile wallet hasn't changed at all. Now Apple is being forced to open their NFC, the wallet wars are about to pop off. And as the only mobile wallet that helps customers save and earn as they spend, Curve Pay is coming to the fight prepared. Do more than just tap to pay. Pay, earn, and save with Curve, the mobile wallet that's long overdue. Download Curve today and earn 1% cashback on your spending in your first 30 days.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's vanta.com/insider for $1,000 off.